Good afternoon, everyone. Welcome to our Wednesday session of RM Smart Investing. It's so wonderful to have you. Today, we're gonna focus on subject of artificial intelligence and robotics and fintech, things that I believe with the situation with COVID-19 last year, it expedited its movement. And I thought it could be timely to discuss that, especially the trend has already started and it will be continuing a lot faster, I believe, in the years to come. So what I'm going to concentrate, rather than talking about the scientific point of view as far as artificial intelligence, I'm going to look at it more from investment point of view, from the investing side, from the portfolio management side, from the trading side, and see if there are any opportunities in finding the companies to invest in. So again, the artificial intelligence. And first of all, what is artificial intelligence? And I know most of you know what it is. And this is from the Oxford, and the idea is the theory and development of a computer system able to perform tasks that normally require human intelligence, such as visual perception, speech recognition, decision making, and translation between languages. So this is the academic definition of it. I can tell you my first encounter with artificial intelligence, it goes back to 1960s movie Space Odyssey, 2001 Space Odyssey. And it was, I think that movie was ahead of its time. And then again, in February of 1996, I never forget, we had the IBM Deep Blue playing chess with Kasparov, and he never lost a game. And in 1996, actually, he won. But they had a rematch in 1997, and at that time, the IBM won. So they had those two matches, the 6 games within those matches. And what happened was that shows you that how far we've come and how the machine has started taking over. In a sense, it's called machine versus man, or man versus machine. So this is the path that we are going. This is the path I think is going to continue a lot faster, and we want to be ahead of the curve and take advantage of it, because a lot of things are going on, and with artificial intelligence in many different aspects of our lives. So basically, when you think of artificial intelligence, as I mentioned, I used the IBM. It's the machine learning, the deep learning. It's all about the data. So in one ways, we did the human beings puts the data in machine, and the machine has such a capability that analyzes all those data. And then the other one, the deep learning, there's a network. It's almost like human brain, the neurons, and they can analyze things so much faster. They can set up pattern recognition. Sometimes when you think of, I just think about Alexa and Siri, talking about the language translations. And now we come back and we see next few years, we have the autonomous, self-driving cars. We see that in financial services, we see that in retail, we see that in banking, we see that in energy, and again, in so many different types of technologies. So basically, it is everywhere. And the companies who were ahead of the curve, they are the ones who are benefiting from this. And as I mentioned, it's just expanded. Last year was amazing, and it's just going to continue. Now, International Data Corporation, IDC, expects that the total spending on AI is going to reach about $97.9 billion in less than 3 years, 2 years, really, 2023. And it was only 37.5 billion in 2019, which is about 28.4% compound growth. Now, this is just, again, you have access to the slides. This tells you the stages of the AI development, from talking about the well-defined environments to complex and real-world systems. We have the recognition tasks, we have the long-term and reasoning tasks. And this is just more of a, for you to understand how deep this, again, this segment of our technology and of the world is. And from, again, the medical to, we talk about robots, and um, basically it is something that, as I mentioned, it's going to be expanding. There are many, many companies that they invest in artificial intelligence, and these are the investors. And you can see Intel Capital is the largest, or the most numbers. It's gone, has invested in 60 different artificial intelligence companies. It was only 48 or 49 a couple of years ago, so they have been expanding, and they're all different. Other, you can see the venture capitals, venture group types of investors who are investing big in this. Also, the top 20 companies invest in AI talent, and this is as of actually 2019, so it has even expanded most. And you can see Amazon by far is doing the most investments, and more companies to follow. Now, when we look at the revenues for enterprise, and going back where we were in 2016 and where we are heading in 2025, you can see the potential and the growth. And actually, it could be even faster and more than that. So I'm going to tell me things. So I'm not going to talk about the medical technology or even self-driving cars and things. Being in the financial industry, I want to just share with you how it is, this artificial intelligence is affecting the financial industry, and you being investors, being the trader, some of you being the portfolio managers and hedge fund managers, just you can see how it actually um, touches home in a way, and how artificial intelligence has changed things. So basically, one of the things it has done, the analyzing data has become a lot faster and smoother. So we can look at, you can see then things in your, just your investment platform, or as a portfolio manager when you're analyzing the data, how fast it has become. Now there's a voice activated orders like TD Ameritrade has, a technology that you can actually, it's almost like Alexa. You just talk to it and it will execute your orders. As far as the behavior of finance, we've talked about our biases. And what happens is, because of the system trading, that emotional biases have gone to the side. And this is a defense, so you do not make emotional reactions. And basically, that also has obviously become helpful. Um, the other thing is, looking at the relationship between the advisors and the clients, because of the automation, it's a lot easier. Things can get, the advisors can get connected to the clients a lot faster and automatically. The other thing is the cost reduction for advisory firms. They are spending less and less money on administrative works and things that they were spending before. Again, going back to efficiency, and that has become another benefit for this. Faster and easier communication. Again, if there is an event, for instance, something like unusual information comes out and event-driven, the markets change. Now, you can program your communication that if there's anything, automatically the clients will be notified. Portfolio optimization, we talked about in our portfolio management, for instance, like rebalancing or optimization of portfolio. Now, once you have the system going, it can do that a lot faster. It can analyze the economic numbers a lot faster, and it can manage it, again, in a much quicker way. And also the proactive portfolio management. Now that we have access to so much information, it can be actually digested a lot faster. So you, as a portfolio manager, you can make quicker decisions. and more of a precise information. Better risk management, obviously, because of all those information and because you go by the system, you can actually protect your profits, and you have, again, because it's automated, you can protect or reduce your losses. And the last but not least I will mention is the more cost-effective investing. Again, because of the competition, especially I talk about exchange-traded funds, there has become a lot of efficiency because, as I mentioned, the reduction of all the administrative costs and other things, actually a lot more affordable and less costly investments are available for investors. So that has become very attractive. One thing about AI, I mean, there's just so many other uses. One of the things was interesting that I remember, when you think about the tax code going to the Congress, for instance, you think about this visually, there's a 4,000 pages, and I remember they put it on top of their desk as they go through this, or a lot of legal documents when you think about all these legalities, thousands of pages. Now, artificial intelligence, all these programs, they can go through all these documents within minutes sometimes, and they will look for the specific word or look for some anomaly or something. So just imagine how much time is being saved. So those are all the pluses. I mean, on the other side of the things, I have to say that now we go back to the machine learning, for instance, still there is a human need. Again, they're replicating our human brain. And the thing that I would say, the negative side of things are, we've talked about cybersecurity, about hacking. We've had like two big flash crashes, which was all, again, there was algos and programs, and then one mistake within seconds. We've had it in Singapore when we had the exchange traded fund drop 20-25% and bounced back again because of this computer programming. So those are the negative sides, and we have to work to improve those, with the things in place. So what I thought is, now that we know about artificial intelligence, what tools can we use? And one of the best ways will be the exchange traded funds. And again, it becomes so much more available, achievable. You can pick and choose so many different ones. And again, it's a theme oriented. So rather than, again, if you don't want to, maybe you have limited capital, you're not able to buy individual stocks, you can always do a diversified exchange traded fund. So one of the examples would be AIQ. So AIQ is, again, it invests in artificial intelligence. You can see it's the use of analyzing big data. So what I wanted to see some of their big holdings. So just by looking at some of the exchange traded funds, some of the ways that I analyze them, I take advantage of them, even if I don't invest in them, is I want to see first of all if they are concentrated, and some of their biggest holdings. So basically that gives me an idea, rather than doing a lot of research on my own from scratch. I want to see, for instance, what AIQ has found and what is their biggest holding and what do they think. And then, of course, I want to look at their expense ratio. I want to see assets under management. This is very modest. Um, Basically, I want to see the volume on average daily volume. So based on that, I can do something like this. I can compare different funds, for instance. I can see AIQ versus BUTS. And you can see BOTZ, which is the Global Robotics and Artificial Intelligence, has 2.62 billion. So it's much larger than AIQ, and it has much more activities, but it is much more concentrated, 87 holdings compared to 33. So these are the foods for thought. And that's why just having the largest assets under management does not make it the best ETF. I think it will be a good idea. We will discuss the ETFs in the future, how to, again, compare them, but not just because something is 2.6 billion doesn't mean it's the best. So we look at the different criteria, but like for instance, I see this 33. The other company, which is this is pretty large, is 3.3 billion. It's Cathy Woods again, the ARQ, and that's actively managed. Again, artificial intelligence related investments, and you can see there's a 52% are concentrated in the top 10. And as you know, Cathy Woods loved Tesla, and you can see that's the number one holding. And there's JD.com and Trimble and Baidu and all that. So that's another way. So we can now compare RKQ with ROBA and see how the expense ratios, how large they are, and how diversified they are. So rather than just giving the names of just a list of the names, I just thought maybe I can compare them and give you some ideas. You can do a little more study on your own or follow them, put it on your watch list. The last but not least of the two is Learns, and basically you can see 59% of their holdings are in the top 10. Again, these are some of the names, very small. You can see it's only 29 million under management. And when we compare that to print, which is the 3D printing, and you can see that, you know, it's 3D printing is 563 million compared to Learns, which is 29.6 and 57 holding. Okay, so I want to just share, you will see a common theme. A lot of those, the patterns are similar. So AIQ has broken out of the triangle or wedge and the same thing. And we have done the same with the Learns and with RKQ and with ROBA and with print. A little different. 3Ds have been in consolidation for quite some time. So like the 3B, the DDD stock, it's been, had a big drop and then has been consolidating. So, and so it's again, different aspects of the artificial intelligence. So, to go one step further, I thought that these are some of the largest, the most respected, and the most active stocks in the artificial intelligence arena. Of course, Google, NVIDIA, which is, again, it has been in the news and been on fire. And of course, they have the split coming up. MICRON technology with the self-driving cars with chips. The IBM, which is one of the oldest, they've been involved for a long time. Microsoft has had huge investments. Amazon, as I showed you, with their investments, and Tesla, again, with their cars, and Adobe. These are some of my top recommendations as far as artificial intelligence goes. Now, I want to go one step further, and we talked about self-driving cars, autonomous cars. So it's a different segment of artificial intelligence. So I want to give you some ideas as far as the ETFs for those. So there's a IDRV, and that one's not a huge one. It's $392 million ETF. We can see that it is pretty diversified around the world. Majority is, of course, in the United States, but they have holdings in different countries. And Tesla and NVIDIA and Apple are, all of them almost over 4%. So 40% is concentrated on the top 10 holdings. So we have iDrive, and then we have Drive. So and that's, again, you can compare the assets under management, large holdings in both of them. So there's battery related and all the other technologies involved. So I want to share with you some of those funds that I think you might find it interesting. Next, what we want to do is speak something about fintech, and we talked about that briefly before. And what is fintech? When we talk about first now with the fintech, basically fintech is financial technology. Now, these are the companies that they develop the software, the apps, the tech solutions that make the financial process more efficient. Now, some of the easiest ones, you have your Apple Pay, you have the Square, you have companies that, you do mobile banking. Now you do all your trading on your iPhone. And basically, nowadays, you don't even use your chip. You just touch the screen with your credit card. You just touch the screen, and that's called contactless payments. We talk about robot advisors from the investment side that they actually, these are your investments portfolio management is done by a platform, by program. And as you know, a lot of investment advisors are aging, and will have less and less financial advisors in the years to come and decades to come, and things are becoming automated. Things are, there's portfolios are becoming, automated. So it's less as far as proactive in that sense, and from the human side, the discretionary side. The blockchain technologies, the budgeting and lending apps, and then brokerage platforms. I mean, we talk about, we look at TD Ameritrade, but we look at the Charles Schwabs of the world, and look at Fidelity's, Vanguard. Of course, you have Robinhood. I mean, that has completely changed the way we have done business. And basically in that arena, one of the, go back to the ETF, how can we invest in those is one of the funds is FinTech. And you can see some of the top companies in that, 56% holding, 1.3 billion under management. And then we compare that to Cathie Wood's ARC-F, which is about $4 billion fund. And they have similar number of holdings. And then you have Coin. Coin is pretty small, so it's 28.5 million. And these are their holdings, for instance. And compare that to VFIN, which is only 2.6 million. There's not a lot of activity in that. But it's just a food for thought to see if there's any opportunity, not just for today, not just for next year, maybe for the decades to come. These are good investments, maybe become part of your long-term portfolio if you believe in them, that you believe in theme. So I just want to share the some of their charts with you. VFIN is just such a low volume, 4,000. I have to go to stock charts, and that's how they're looking. And basically, as far as the top fintech stocks, just by hearing the names, you can appreciate again what's going on, like from the square, from going from the business to business to the individuals, the processing the credit cards to PayPal, and you think about Venmos of the world and Zells, and all of those things have gotten a lot easier. I remember in the 80s or so when I wanted to send money somewhere, you go wire to your bank, it takes weeks and you have to keep following, and not everything is done so quickly. So some of the big companies, again, is Goldman Sachs, Morgan Stanley is involved, Green Dot, and MercadoLibre is like almost Amazon of Argentina and Latin America, MELI, and then we have global payments, MasterCard, Visa, the same idea. And then I added 3, these are really new companies, recent IPOs, Bill.com, Lemonade, and Rocket, of course, the Rocket Mortgage Financing. So I thought that might be something useful for you. At the end, what I want to do, I want to just put these in perspective to show you what they have done, their performance year to date, and what they're doing for the weekly. So you can compare from the strength, but also look at their volume, their average volume, and see if this is something that you'd like to pursue. The same thing with the self-driving cars. You can see I didn't put Moto or e-car. The volume is so minimal, so there's a big spread sometimes, and they're not, it's very difficult to invest in these type of ETFs. So you have to just watch unless something comes in a big, if there's a surge of volume, then that will be something you can look at it. So you want to go with more liquid companies. By the way, drive cars, I drive, they all have options. Majority of these have options if you wanted to play more liquid ones. And you can also take advantage of that as far as investing for a long term. With that in mind, as I mentioned, I want to make it short and I wanted to just share, open the doors with the ideas, things that you can actually, again, build on a foundation. And this is going to be something that it's going to stay with us for a long time. So with that in mind, what I'm going to do, um, I'm going to stop recording and I can do that and open up for questions. So if I can get there, that would be awesome. And it's not working. All right, well, you know what? I'm going to continue. Any questions?
I have
Anyone?
a question, Ramin.
Yes, Jean-Claude.
If you go to the slide on page 20, which is like the graph of RQ,
Oh,
you
the
see there's a break. So there's you can see the channel of RQ and then obviously a breakout. But would you consider that a breakout because the candles are so small?
good question.
How do you
So
view that?
is that
It's a Finviz graph.
right, right. Which one is it?
RQ page 20, I think.
This one. Okay. Okay. Is this the ARKQ, right?
Yeah, ARKQ, yeah.
Yeah, good question. So the way I look at it, first of all, I look at the length of the this channel. It has been pretty much consolidating and in a very narrow range. And basically, one of the things I do like to see is a breakout with a high volume. And I don't see that here. See, it's a very small volume. Like you said, the candles are pretty small. So there's still indecision. And then we do have a resistance down around $90 or so. But the breakout, we have had a follow through, Jean-Claude, with this breakout. Although the candles are narrow, as you know, I have my 2 candle rule. And since we are in, it will give me the confirmation we are above the all the moving averages. So that's positive. Um, Also, all the sectors, basically, it's more of a sector driven. All of them look very similar. So we all broken out. Um, but there's indecision. You also have to remember this is the summer doldrums and the volumes are low and there's a lot of decision going on. So, but yeah, I would accept this because 1, twice, 3 times, 4 times, I mean, almost 5 times we could not break this trend line, and we finally did that. And I would put my stop. You can put your stop. You don't have to go too far. And you can put your stop below the moving average, maybe, or right under the 20-day moving average if you like. But other than that, it's not completely convincing. Again, I like to see larger volume and I like to see a bigger bar when there's a big breakout. Um, so there's a lot of indecision, as you mentioned, very small bars. Um, but other than that, I think, I would get my feet wet. This will be a good time to even use, I don't have the Ichimoku, although I could cheat. My other computer is here. I could take a look at, if you're really interested, I'll take a look at.
No, I was just interested to see how you view,
Yeah,
like
I
how
wouldn't.
your thought process about, like, I see this breakthrough and I was wanted
Yeah.
to see what your thought process was.
Yeah, I mean, it has been a nice channel and we finally broke out of it. So I wouldn't mind even buying call options or verticals on this. You can do a vertical debit spread on this. Um,
Hmm.
we have options in this available. So yeah,
Thank you. I mean,
you're welcome. Any other questions? Well, I hope it was informative. It's something different. Okay. No other questions? Yeah.
I was just wondering, you mentioned self-driving cars.
Yes.
I was wondering if you or anybody else has looked at the infrastructure and the companies that might be, you know, investing in infrastructure related to self-driving cars, because I think that's probably the next step to actually make the technology possible, is to build the infrastructure and make the roads better for
Yes. I mean, that is the
cars, or their
so the way. So you have to remember this the compliance or the legality side of things. The way the outlook is, there are quite a few companies already involved, as you know, from Tesla to Google to Apple,
yeah.
and even Audi, and the projection is that the feeling is, I think, state of California by 2025, almost everything it would have been, it would be approved. So the outlook is that's next 4 years, things are going to be um, where we can actually see that the things are actually happening. And I know, Mercedes has decided to go, but then they slowed down, but they're coming back. So there's a lot of technology out there. They're still trying to obviously get the glitches out. But even the Uber, for instance, that could affect Uber and Lyft. I mean, when you have these, how that's going to work, would that the whole, I think, business model will change. And the other suggestion is, if we talk about the drones, there has been testing going on actually in small scales, in LA, I think that, you're going to have times like using drones to transport from one place to another place. So those are the things that, again, the business model will be affected. And as I said, I think last year we talked about, we are the new generations, we are moving from asset ownership to living with less toys and being more mobile, and basically owning a car. Sometimes, I mean, it's going to be obsolete. So because there's just so many things available. So even self-driving cars would be, if you're going to use it for 1 hour a day, you're just going to go to work and come back. Well, will there be services available? The car just comes in front of your house, takes you to work, and then it's almost like the movies that you whistle for your horse and the horse shows up. You just jump in the car. So I don't know. I mean, but that's the future, and that's what I like to share. Like when I look at iDrive, for instance, I want to see, oh, okay, what technologies are out there that they own, for instance, and that's one of the ways you can find and dig more to see, okay, what is the future and what companies are involved with this. And you can see there's a Daimler and Samsung and NVIDIA. So, but yeah, I think that's the way I see it. So, okay. Any other question? Just want to. Okay. If not, I hope this was informative. I want to make it short and sweet. So um, we'll just open the doors for many other opportunities. And with that in mind, I'll hope everyone had a good week so far. Wish you a wonderful week ahead and a fantastic week ahead. And I'll look forward to seeing you on Saturday, which is the 4th of July weekend, by the way. And just be watchful for Friday with the unemployment numbers coming in. So and then just remember, by Friday after lunch, East Coast time, a lot of traders and investors, they're ready for their 3-day vacation or holiday, and probably it will be slow afternoon, most likely. So anyway, just a food for thought. With that in mind, thank you very much, everyone. Thank you for being part of our group again. And I look forward to seeing everyone on Saturday. Thank you so much.
Thank you,
Ramin.
Ramin.
Thank you, Ramin.
Thank you, Ramin. Bye.
Welcome. Bye-bye.
Bye.
Bye-bye.
Thank you.
You're welcome.